Hello and welcome to the Weekend Investing Daily Bite of 28th of November, a day where it seemed like the market is going to break out on the higher side. Last three sessions were in a very tight range. There was a gap below the tight range, and the sky was open for the market to go up, but the market collapsed and filled the entire gap during the day, and that was the end of this expiry. So it could have been expiry play. Tomorrow it will be clear whether the market was really weak or the market has played its hand on expiry. In today's video, we will go through a thesis of how some US election years have really changed the trajectory of markets globally, and long-term trends can change basis some of these changes in the presidential office. So is this one of them? Is something that we want to go over the history and discuss in second part of this video. Also, we've launched a portfolio momentum report. If you like, you could go to the link in the description or scan this QR code and go to the link. It'll ask you to upload or put in your current investments, the stocks and the number of stocks, and it will give you a momentum score. So that will tell you how many of your stocks are with good momentum or in low momentum. It will give you a snapshot or performance of your portfolio health from a momentum perspective. And it will also give you a weightage skew in case some of the stocks are becoming concentrated risks for your portfolio. It will tell you that as well. So once you submit that form, an email gets generated in the next 5 minutes and you'll get the report in your hand. Please do read the disclaimer. As always, do subscribe to the channel and also click on the bell notification. So here, as we see, last three sessions, extremely tight sessions here. There was a chance that we break out from here and test these resistances, but instead the market chose to come down and fill this gap. The gap has been there for 3 days. So now that this is closed, the next move, obviously, market may need to, consolidate here and try again, or we are going towards, this support again. That is the two options that kind of are available. Minus 1.49% on the Nifty Next 50. There was no impact at all, and market closed at 0.1%. So that is why I'm saying maybe it is an expiry play on large caps that happened in Nifty stocks. Um, Remember, Nifty is now the only sort of weekly option strategy available. So more and more players will now be jumping on Nifty for expiry day plays. So, it is likely, in my view, that expiries are going to get even more volatile going forward. So Nifty Junior, no impact. In terms of mid caps, again, plus 0.01%, 0% impact on today's move. Of course, they gave back some of the gains in the first half of the session, and small caps also at 0.14%. So none of the other indices other than Nifty really showing that kind of weakness what Nifty is showing. Bank Nifty, of course, was down 0.76%, led by HDFC Bank. Again, I mean, it created a new high, but then it collapsed on itself in the second half of the session. Momentum trends were 219 advances to 280 declines. Not so bad, I would say, given the kind of move that has happened in the index, but the larger part of the market was not looking so bad. FIIs till yesterday, third day in running, a green uh, number there, although 7.78 crores was extremely low. DIS cash, the number was not available perhaps. The flow from FIIs is not uh, majorly positive, but for the last two sessions, it is not negative also. And today's session is probably more important to see how these numbers go forward. Today's heat map for Nifty is completely red. Mahindra and Mahindra smashed down after the launch of their new car. I guess people did not like the hype that was created around it, perhaps, or maybe it is sell on news. Infosys, HCL Tech, TCS, Wipro, Tech Mahindra all down quite substantially. I think IT stocks are getting nervous ahead of the new government in the US. Reliance down 1.73% despite several buy reports coming from analysts in the last couple of days. Bajaj Finance down 3%, HDFC Bank down 1% after making a new high, ICICI Bank also 1% down, State Bank stable. And you also had Power Grid, NTPC, Ultrasemco, JSW all down more than 1%. Adani stocks were mixed, some up, some down. Nestle continues the journey down at minus 1.6%. Nifty Next 50, however, was quite green. Adani Power, Adani Green, Adani and Sol, Adani Total Gas all doing quite well. Many Adani stocks are now much above where the crisis started last week, and that is very surprising. I mean, now that stocks were to come back, but they've far exceeded where they were before. So maybe the crisis was good for some of the Adani stocks. LIC up 2.4%, IRFC, PNB, ICC Proli also up 1.5 to 2%, BHEL up 2%, Indigo, DMart, VBL all doing quite well. There was no major damage except LTIM, Naukri, DLF, JSW Energy losing about a percent and a half. Sectoral trends, IT stocks losing the most at 2.4%, autos also losing 1.6%, infra, private banks and consumption losing about a percent, others were lesser. PSU banks standing their ground at 0.9%, largely on back of State Bank of India, and real estate also not moving down today. So that was also, I think, the important part, that with the Nifty, the real estate sector did not move down today at least. In terms of the PSU banks, it is gradually now coming back. It has been resting for almost 9 or 10 months now, and there may be a chance that this sector is now coming back into action. You had smaller banks, IOB, Indian Bank, Punjab Sind Bank, PNB, Bank of Maharashtra, all gaining gradually. In the stock spotlight, you had Adani Total Gas. As I was mentioning, we were here before this crisis, and the day the news came, it gapped down and still went up. And then, yesterday was a complete gap cover and going beyond, and today was another 15-16%. So from 550 to 800 in just 5 sessions, 6 sessions is amazing run up. It tells you that the stock is not weak, at least not at this level. At around 550 to 600, a lot of buying is emerging in this, in case there is another controversy that comes. Of course, the main topic for the day is US election years, and we will go back and do some history check and see that whether the current year is also pointing towards that kind of a move. The source of for this research is Bravo's research. So this is the 1928 Black Tuesday and Great Depression chart, where markets went down 88%. So besides anything else, I think a lot of folks in the markets should have a sense of history also, that there has been an instance where markets went down 88%. It would mean in today's terms, Nifty going from 24,000 to about 500. So this has happened in the past. Hopefully it will never happen again, but you can never really say never again. So in 1928, President Hoover came to the presidentship in the Oval Office, and he was also a pro-business Republican who favored the private sector growth, supported tax cuts, exactly what Trump is saying now. The policies were pro-growth, yet the depression happened and it was unavoidable. So if we see the history of the depression, the stock market rallied into that election year on promises of tax cuts, deregulation, etc., etc., and even rose for some time after the president came into office. But these policies could not prevent the most severe recession in US history. So this is good to know about the historical past of certain presidencies. So then the next one was, which was important for this context, was 1972 when President Nixon came into power. And here again, post coming into the office, there was a 47% drawdown in Dow Jones Industrial Average, and almost 8 years of consolidation before the markets took off again. Another one was George Bush, who came in year 2000. There was a 39% drawdown immediately after him coming to office. 10 years of consolidation before Dow Jones really took off again. A 54% drawdown also came in 2008 post his presidency. So similarly, Nixon in 72 here, And George Bush in 2000, they pushed both for lower taxes and free market economy. However, both could not prevent the recession shortly after the election. There could have been many other reasons: Vietnam War in the 70s, and possibly the dot-com crisis in 2000. But we are witnessing a very, very strong trajectory in the past decade or so. And who knows whether the history will repeat itself or not. Hopefully not. But we cannot be, completely unaware of the past that we've had with with different presidencies coming to the fore. Because see, US is like the mother market of the world, and US can influence a lot of policies, a lot of trade across the world. So if tomorrow's US says that we are not going to take any Chinese products, I mean, you can imagine what kind of hell can break loose. Or if US says that we will not export any oil from tomorrow, or whatever may be the knee-jerk reaction that may happen, it can really topple a lot of stable things. So we have also seen now that in the last 1 year, while till September there was hardly any divergence between S&P and Nifty, and Nifty we have calibrated in USD INR terms. Since September, there has been a marked difference in terms of the trajectory of Nifty versus the US markets. There has been a lot of narrative about tariffs. There's a lot of narratives about how US markets is going to, there's going to be deregulation, cutting off of ministries, how they're going to cut off their fiscal deficit, and a lot of positive optimism is there in the US markets, but I don't know how much of that will come through. So as Bravo research says, 1928, 72, and 2000 all stand out as pivotal turning points. If you see the last 100 years of S&P 500 data, these are standing out as the pivotal points, and they were all closely tied to US elections and new presidents coming into the office. So while presidents have limited powers over business cycles, but policies cannot outright prevent downtrends. So maybe a lot of it is already getting built into the market, and when Trump comes into the office, maybe a sell-on news kind of an event may happen, where everything is already baked into the price, and you really don't have much of optimism left beyond that point to surprise the market on the higher side. So this is one sort of thought process that is there. We cannot be like ostrich and not think about such outcomes, and put our head in the sand. But do sort of give your comments on if you feel that that US market is running amok. In terms of long-term averages, US market is like 20-30% beyond the usual long-term average valuations also. And with the kind of gush towards the US markets, with US dollar also racing from 100 to 107, there is a lot of liquidity that has gone into the US market. Now, will that come off? And if that comes off, it may not impact India directly, but a lot of IT sector and exports to the US may get impacted. So that is another sort of a part of the market which can really suffer a brunt. So thank you so much for watching. I would like you to share and like this video if you did, and do subscribe to the channel, and do of course keep sharing your thoughts on the YouTube comments. Thanks. Bye.